All right. Looks like we're good to go. Hey, guys, we are back. Welcome back to We Talk Money. I'm your host, Chris Dunn. I'm joined by Nikki, certified financial planner, and Travis, stock investor professional. Man, it's been a few weeks since we've done the last show. We've been on the road traveling, and now we're back in the regular studio. So thanks for hanging in with us, guys. A ton to talk about. Markets all over the place have been making really big moves, a lot of news, a lot of developments from the crypto space and stocks and gold and real estate and RVs and lumber and everything. Guys, thanks for joining me today.
Ooh, you're welcome. Yeah, it's crazy. Stock market's making all-time highs. People can't find an RV. All kinds of things going on.
Lumber is breaking out to ridiculous prices, which is driving housing prices through the roof. Trav, what are you seeing out there, bud?
Yeah, it's like you said, it's a wild times. It's momentum everywhere we look almost. It's a strange year and it just continues to get weirder.
Yep. Let's take a look at some charts. So if we look at just kind of the futures performance of different markets, if we look at year to date and we look at the indices, you can see the NASDAQ is up over 30% so far this year. So that is obviously driven by tech stocks. We've got the S&P 500 even in positive territory right now. The Russell 2000 is still down about 6 or 7%. And then if we look right here, the number one market is lumber, up a little under 90% as of right now. And we can talk about why that is. When we look at metals, gold is up 27%. Silver's up, 48%.
What pandemic?
Yeah, what pandemic? We've got Bitcoin that had a big breakout a couple of weeks ago above 10,500. We've had some absolute monster altcoin trades, some of my biggest trades ever over the past couple of months. We can cover some of those. What do you guys want to start with?
We don't even know where to start. Yeah, I don't know. I don't even know where to start.
Let's start with crypto because I know a lot of people on my channel want to talk about crypto. So,
okay.
We had a big breakout here on July 27th, and you can see we've kind of just been grinding higher. And one thing that Bitcoin loves to do is trap. Anytime it looks like it's breaking out, and when the consensus just gets overwhelmingly bullish and everybody's like, singing praises and checking their portfolios and feeling wealthy, Bitcoin likes to slam down and punish people. And you can really see that if we go down to an hourly chart. You can see back here after the breakout, and I was tweeting about this, but you had the breakout at 10,500. It got up to 12,000. And when things look their most bullish and when everybody's in agreement, what typically happens is people like to stack stops behind the last support zone. And that's where you get these big kind of capitulation candles you can see on extreme volume. And Bitcoin actually fell about 15 or a little less than 15% in the span of 1 hour. And what that does is it basically wipes out weak hands, right? And then you can see it's basically been holding up. After it wipes out the weak hands, it goes up. And we had something a little similar last week or over the past few days where we had a breakout again to retest above 12,000, and then it snaps down to kind of trap people. So that's something just to keep in mind, guys. For anybody that's like trying to buy breakouts, make sure you're buying at the breakout level and keeping risk to reward in mind. Some of the other really big trades we've had over the past couple of weeks was Link. So Link was one that we bought and sent trade alerts out at $5. And then my kind of style, and I want to hear how you guys manage trades, but my style is I like to scale out at predefined profit targets. So my first target was $8. I took a quarter of my position off the table. So basically took 25% off, closed another quarter in the low teens, and then another quarter up here, I think above $18, somewhere up here. And then I'm still holding a little bit of this position. But, instead of trying to guess where the exact top is, what I like to do is scale out into strength. How does that kind of correlate with how you guys do it? Are you all in, all out? Do you scale in, scale out? What does that look like?
I'm a huge fan of scaling. I really like taking out my cost basis kind of on when I hit my first target, or at least part of my cost basis. And I basically work on that first, pulling that cost basis out. And then from there, I hold to other targets depending on how strong price action looks. Or
what about you, Trav?
I'm the same way. I'm a huge fan of scaling in and scaling out because it helps you manage a lot of the psychology around profit taking and things like that, especially with fundamental investing, which is my style, where I'm digging deep into companies and coming up with price targets. It's really nice because I can define, similar to how you do, places where, prices that I'm going to scale out at least parts of my position. And that is just a really nice way to capture a big chunk of the move. And of course, you're not going to be able to time everything perfectly where you're going to buy it at the low and sell it exactly at the top. So this really does help with the psychology of, being able to be comfortable with taking profit and having profits without having to feel like you have to hit every single top exactly with your selling.
Exactly.
Yeah, I agree. I mean, trying to pick the exact top is not only impossible to do accurately over time, but it just adds an extra level of stress that is really not necessary. Do you guys have any recent stock trades that you've scaled out on that we can use as an example or just to kind of look at?
I did actually not too long ago. I had Lulu. I scaled out my cost basis recently.
Lulu's just been going insane.
Yeah,
by the way.
Around like the 320 level. I
So you
scaled
guys were
out my
buying
cost
this a couple
basis.
years ago, right?
Yeah. We
In
bought
the,
it around
50s
like
or?
the low 50s, I want to say. And
So when it was in this consolidation accumulation range.
Yeah, it's when they had their yoga pants, see-through black yoga pants debacle.
Yeah.
And I was like, I'm scooping some shares. So,
Yeah.
I actually ended up recently taking out my cost basis, and I'm still holding the rest of it.
Beautiful.
And I'm up like 1,600 or 600% on what I have left. It's crazy.
Nice.
It's awesome when you're able to take profits on something where you can actually take your full cost basis out and you still have a good amount of position on to let it ride. That's one of my favorite types of scales.
Yeah.
And obviously you need to be a multi-bagger. You need to have the stock or the, in your case, I guess, cryptocurrency double to make that happen. But when that does happen, when you identify something that can be a multi-bagger, it's so sweet to be able to take all your initial cost basis out and still have position on the table to be able to benefit from further gains.
Another one that I did that on is Tezos. So we were buying back here in the 50 to 70 cent range. And whenever it made its first run up to like $3, I took the cost basis out, which basically means whatever your original investment is. And then what that does at that point is everything else is free money, right? So if it goes to zero, you don't lose anything. If it goes to your next target, you're going to double or triple what is remaining on there. So that's what I did. And then I like to scale out into strength. So you can see, I mean, this thing's still holding up, but it's nice just to be able to remove that extra level of stress. So just taking a look again at kind of the overall crypto market. If we look at, I like to look at US tradable assets. I know we've talked about this the past couple of shows where, there are literally thousands of cryptos you can trade. I tend to focus on the ones that have good exchange diversification and trade on US exchanges. I just noticed that you get better liquidity, you get better trends over time. And so if we look over, the gain and the gainers and losers over the past 30 days, you can see that pretty much most of this list is positive. So we've been in kind of a mini altcoin season, and we see most of this above 10, 20, 30%. We've got a handful that are actually up above 100%. And there's just really a few that are flat or down a little bit. So we've seen like just this extra wave of liquidity and movement coming into the markets, which has been really nice. Taking a look at stocks. So Trav, I want to kick this over to you and Nikki. As of right now, the S&P 500 just broke out today to a new all-time high. And obviously, the NASDAQ, which is tech stocks, that broke the all-time high back here in early June and has really just been in this ascending channel. What do you guys make of this? Again, the Fed's been printing a lot. We've got stimulus packages, hopefully more on the way. I know, this is just making a lot of people angry, a lot of people confused. Where are we at and why? And what are you guys doing? And what are you seeing? What are you forecasting?
You take that first, Trav.
Well, we've talked about the drivers of this trend quite a bit over the last few months. And I know that, a lot of this gets blamed on the Fed or on money printing. But when you look at other markets around the world, the European governments they've been giving a lot of fiscal response and actually, putting forth a lot of fiscal stimulus, but it hasn't helped those markets. And so the argument that this is a totally Fed driven, I don't think holds water. I do think when you look at certain things like the fact that large companies, Apple, Google, Microsoft, those types of companies have benefited from this weird year where we've had shutdowns and we've had a shift to e-commerce and we've had a shift to work from home. The big get bigger. And unfortunately, a lot of small and medium-sized businesses have been faltering. Not all of them, but in some cases, we do see like higher uptick in bankruptcies among SMBs in the US, for instance. And so what's happened is there's been a shift of market share towards a lot of these larger companies. And those fundamentals are, they're real things. And so that has benefited the stocks, their actual bottom line, the revenues, the profits of those companies. And so the stock price increases aren't that surprising in that context. But layer on top of that, I think we also do have a bit of a speculative bubble in certain stocks. You can look at things like Apple, which is now trading way above its historical valuation range. And, we see stocks like Apple and Tesla, which announced stock splits, and that actually propels the stock price increase. And that's not really, a stock split isn't really adding any value. And so it's when you see things like that, you do see that, there is some type of a speculative frenzy happening on top of what we have underneath with the fundamentals. So I think it's a combination of real things happening and then also investors just getting overly excited about some of these stocks. And you can see that in the NASDAQ being up, 30, almost 35% year to date, with most other equity indices around the world, even the S&P 500 only up single digit percentages. So yeah, like I said, a lot of complex factors underneath there, but I think, it's not all just driven by irrationality.
You mean it's not all the Fed?
It's not. I've seen some interesting arguments too about, the fact that, the Fed is not buying equities. The Fed has been buying bonds. So that shifts the balance sheet, in terms of bond allocations, but most of that excess funds in the bond market have not shifted to equities based on a lot of the fund flows that we've seen. So there really isn't an argument there. I don't think that argument really holds a lot of water. So I do think the fiscal stimulus and the fact that people got checks from the government did help consumer spending, and some of that spending did go into the stock market. Mm-hmm. So I do think that part of it is real. But, you look at other time periods too, where the Fed printed money, like in the 08-09 crisis, and, the market went up a decade later, but it wasn't a direct one-for-one between, the Fed printing money and the stock market going up. Like it took a while for stocks to recover and for the economy to recover back then. So,
and also I think that there is something to the fact that the market is looking way ahead and it's thinking, okay, the market is just expecting earnings to recover. I mean, even if we just get back to what last year's earnings were, I think the market is thinking that that's very possible. And I saw an interesting argument on Twitter that people were saying that the market doesn't forecast 12 to 18 months in the future, and they were basically kind of bashing on someone that went on, I think it was CNBC or one of those stations, and was talking about that. And she got tons of hate from it. And I'm thinking to myself, well, that is what the market does. The market does forecast for the future. And that's why there's this disconnect between what's going on now with the economy and what the market is doing. It's in, another year, the market's going to be forecasting for the year ahead. And it's just this continuous cycle. So whether or not that's not to say that there's not some exuberant valuations out there, certainly, but it's not as much of a crazy thought if you actually look at the earnings forecasts and what we could expect them to recover. Now, if we see the S&P, run another 15% or 10% from here, that'd just be like crazy, but It's
Yeah.
not at the current state. It's not such a crazy thought to think that investors are just thinking way ahead.
I think that's a great point. And we've just come out of the bulk of the Q2 earnings reporting season. And what we saw was that there was significant economic recovery with most companies' businesses from May to June type of time frame and into July and August, because, on the earnings calls, they actually talk about trends into Q3 as well. So we continue to see a pretty big recovery in a lot of different businesses. We've certainly seen that in things like housing stock. We've seen that housing stocks. We've seen that also in even retail and travel have been recovering a little bit. We've got the travel numbers slowly increasing over the last few weeks again in terms of the number of air travelers and things like that. So yeah, I think that's real. And it's interesting when you look at like the Russell 2000, which I think is either slightly down or flat for the year still, and the NASDAQ, which is up 35%, you can really see that bifurcation between the companies that are doing super, super well in this environment and the ones that may be lagging behind, the smaller companies out there. So that just shows you too, that it's not just the Fed lifting all boats necessarily. There is some bifurcation between like tech and, small business like you have in the Russell index.
Yeah. There have definitely been some nice surprises. Something like housing booming right now lifts other businesses as well. You have your Home Depot. You have certain retailers that sell home goods. Yeah, it's just even Target. Target's comps were just freaking like what? Like
it was like 20 to 25% year-over-year sales growth, right?
I think they had 10% in store, and then their online was insane. I think it was like over 100%. I'd have to double check, but it was
even Foot Locker. They just reported their Q2, and they saw 17% sales growth, and a lot of that came in the back end of the quarter. And of course, a lot of that too was e-commerce. E-commerce was up like 180% for them.
Mm-hmm. And even L Brands, which is Victoria's Secret. That's who owns Victoria's Secret. They were like dying off. Their Bath and Body Works line their numbers were pretty insane. And even I think Victoria's Secret kind of had a little bit of a bump, but it's not like it's all smoke and mirrors with the market. There are things behind it that are happening and companies that are benefiting one way or another. And we may not like it that the market's at all-time highs, but it's there.
It does beg the question, though, about the rest of the year and what things look like going forward. Does this continue? A lot of people have been asking me lately, should I invest in tech stocks at these types of valuations? Should I keep money out of the market? Should I take money out of the market? And I think that's on a lot of people's minds right now is like, how much do you let this ride and keep a bet on this?
I think the worry is that future returns are just not going to be what people may have hoped for. It just may
when you've got
future
Apple
returns.
And Tesla and Zoom and a lot of these tech stocks that are just running to insane valuations. Like what do you guys make of that? And what does somebody do that? I think that was one of our questions this week was, Andrew was asking, what's the best strategy for dealing with runaway stocks that feel primed for more growth? For example, like Lululemon, I grabbed other great tech stocks in the drop, but I missed Lulu, or just other stocks, retail tech, whatever. It's been running away since with modest 10% corrections along the way. And I get that they're expensive, but so is Shopify, Tesla, and Amazon, and they're all up at least 100% since I bought them at quote unquote expensive prices, right? So when you see these stocks that just keep going, right? Like what does somebody do? Do they just chase? Do they sit out and feel the FOMO? How do you guys tend to think about that?
So, Trav, I'm curious to hear what you have to say about this. I was talking about this in the chat room, in the community with Andrew actually, and really what we kind of came to was you have to think about the risk reward at the level you're at, and really thinking about not only the valuation but also physically what the chart is looking like. When you're buying it and prices have been going straight up for 2 weeks straight. In the case of, Tesla or even Apple, you have to think about, okay, yeah, sure. It could definitely go up another, 50%, but you've got so much room below. You've got just so much room below for it to fall. that the risk to reward is it's just asymmetrical in the wrong direction. There's way more risk at that point than there is reward, so to speak. So sure, Tesla could, like the chart you have up right now, Tesla could totally keep running, but you have to look at what's below you. How far could it fall too? And, you know, could you maybe whatever reward opportunity percentage wise that stock is going to give you, or investment, whatever it is that worth it, tying up your capital for that specific opportunity? It just really depends on a few things and kind of how you manage it. But you're really curious to hear your take on this, Trav.
Yeah, that's a great point. I think the risk reward point is really the key there, because like you said, you know, when I like to find stocks that have multi-bagger potential, it's really unlikely that a stock that's already at, you know, a $500 billion valuation and trading at all-time valuation multiples, it's really unlikely that's going to be up 4 to 5x in a couple of years with low risk. And so
exactly.
that's not something that I typically want to bet on, that the greater fool theory necessarily. So yes, can these stocks continue to go higher? For sure. And if you really feel like you want to have some exposure to them in this type of environment, then just size them smaller. You know, that's one way to deal with it. And that's, I think, a fine approach. For me personally, I am just being careful about picking my spots. I don't want to chase parabolic charts because I know how that typically ends up, especially on my type of time frames. You know, I'm a longer term investor, and my holding periods will typically be anywhere from like 12 to 36 months typically, and sometimes even longer. I've been trying to actually extend my holding periods. And so when you look at those types of timeframes, price does matter. Valuation, starting valuation typically does matter over like 5 and 10-year timeframes to your actual returns. And so I don't want to be buying something at 35, 40 times sales, which is, yeah, they're growing the underlying business, but they're going to need like 20 years of really solid growth uninterrupted to be able to justify today's price. And so that's just not the type of bet that I personally like to necessarily make. Mm-hmm. But again, if you're a shorter term trader and your timeframes are shorter, then you can use the momentum approach and use price and have tighter stops. And then you can perhaps, you know, continue to ride these winners. So I think that's one way to think about it. Another way to think about it is you don't have to be all in momentum or all out of momentum. I've got some stocks in my portfolio, which are definitely more like value stocks that I think are low valuations that I think in a few years can improve and go up. But then I've also got some hotter stocks like AMD, even Square and Facebook, you could probably say have quite a bit of price momentum right now, and I'm still holding them. And so I have kind of a blended portfolio of growth and value. And I think that's another way to perhaps tackle something like this, where you don't have to take 100% valuation risk on all your portfolio, but maybe you have a few higher risk, higher reward type of names.
Yeah. Well
and
said.
To your point about like the difference between like actively trading and long-term like value investing, like for tickers, and I know we've talked about this in past shows, like tickers that are really hot and popular and on like the Robinhood leaderboard and whatnot, you know, to buy those and think about things in a rational, you know, valuation metric, like it just doesn't make sense. But if you look at the chart and you look for things like a short squeeze, right? Like for those of you watching on YouTube, if you look at the video, there was a lot of resistance through $1,000, right? That was obviously a big emotional price level that took several months to get through. But once that short squeeze started to happen, that was actually a really nice breakout trade for traders. So I think the point is like, if you're looking at these high momentum plays, you have to have the skill set to actually trade and understand price action and risk to reward and how to get in and out more like a sniper, more so than like a Buffett, right? Where you don't really pay attention to the chart and you just think about the business long term. That's kind of what we did with Bitcoin back in 2017, right? Is we had this just really epic bull trend that lasted much longer than really anybody expected. And the best way to play that was not to think about Bitcoin from a valuation standpoint, but to look at the chart and just buy dips and buy breakouts on the way up. And then when the trend changes, you get out, right? It's the people that, you know, kind of blindly buy Tesla or blindly buy Bitcoin or any kind of, you know, high momentum play that aren't engaged with the markets, aren't paying attention to the TA, don't understand how to look at market sentiment. they're the ones that end up on the wrong side of the market, where if you can be a sniper and get in and out and buy at the right inflection points, that's where you can actually make a lot of money in those types of plays.
Well, I think this is something that we can all agree on when we think about our investing and trading styles. You make money when you buy. You've heard that quote before, I'm sure. I think I'm just very mindful of valuation and where the value that I'm getting and am I getting a deal? Maybe I'm just too much of a bargain shopper to be buying Tesla at 2,000.
Well,
I don't
serves
know.
you really well. You got Square at what, $9?
Yeah.
So.
Those are the deals I'm hunting for. Like, sure,
Yeah.
Could Tesla go to 2,500? Maybe, but am I going to sleep at night knowing that I'm long that? Absolutely not. I mean, the valuation, I think at this point is like the size of Walmart, isn't it? Or it's like close.
It's
that
about 400 billion.
Yeah,
Wow.
that does not compute in my brain at all. And I'm not going to sleep at night knowing that I'm long that. So that's kind of how I approach it.
Awesome.
Absolutely. And I do think waiting for, if you do have a great company that you think is maybe just mildly expensive, waiting for some of these pullbacks is another strategy, because especially in stocks, we do see pretty frequent 5 to 10% pullbacks in the market, which can mean, 15 to 20% pullbacks in individual stocks.
Mm-hmm. Yeah. And like, if you look at a company like Apple, the trend so far over the past decade has been every couple of years, you get a 30 to 40% pullback, right?
Mm-hmm.
So from here in 2012, you had a 45% sale. Here in 2015, you had a 35% sale. Here in 2018, you had a 30 to 40% sale. So like companies that are growing and are high quality, if you just wait here, again, here in 2020, you got a 35% pullback. So if you kind of pre-identify and keep those on your watch list and just wait for a discount in price, maybe that's a strong strategy as well.
That's an
Absolutely.
amazing point. Yes. I even mentioned that in regards to Andrew's question that we were talking about, I mentioned this, that I know that in my experience, there's usually always an opportunity that comes eventually. Sometimes you're waiting a while, but if you wait and you can get a better entry price that's going to improve your returns, over the long run, then patience can pay.
Yep. That's how I think about crypto too. I'm not in here over trading every day. Like, I only take, maybe a dozen or 2 dozen trades a year. And on average, my trades are much, much larger, both in position size and in gains, because I'm holding for those bigger moves and being patient for really the best types of setups. I'm not just in, trying to hyper scout, trade less, profit more. I know that's been the theme of this year. So awesome. Let's go ahead and jump over to metals real quick. We actually had, I can't remember if we had hit this high during the last show or not, but we basically had 3 straight weeks of buying in gold where we broke up above 2,000. We've been kind of consolidating here for a couple of weeks, but one thing that I found really interesting is if we look at the really, really long-term price action here, so going back to the early 2000s when gold was in the $200 range, up to the run in the 2011 high around 1900, minus the pullback in 2015 around $1,000, we basically just hit the 61% extension around $2,100. So gold is actually trading on a much, much longer term basis. According to technical analysis, it's actually a really beautiful chart. And my guess, and actually I literally have skin in the game. I've been accumulating gold for the past 5 years through the 1,200 range. I think we have more to go on the upside, but I'm not surprised to see a pause here at 2,100. What do you guys think? Any thoughts on gold or silver?
Trav, you can go ahead.
Yeah, I've never been really, I've never felt like I had an edge in the metals markets and gold and silver. I've been more of a kind of a longer term, very small position in gold and silver. But I think there's probably a lot that's going to happen with these markets in the next 6 to 12 months, just around what happens with fiscal stimulus, interest rates, elections. I think it's going to be an interesting market to trade. And I think it does have potentially, fundamentally a lot more upside if certain conditions hold, but hard for me to really use my like fundamental stock investor toolkit to be able to have a whole lot of insight into gold and silver.
Yeah.
So I won't claim to be the expert, but I do think there's a lot of interesting underlying factors that cross over into stocks. Like I said, like, interest rates and Fed actions and stimulus that I think will be drivers for the market in metals going forward. And there's a lot of momentum behind it, including large funds and large hedge funds and long only funds that have increased their positions. So it's interesting to see that dynamic play out as well.
Mm-hmm.
Yeah. Obviously the Fed has been printing a lot of money recently, and, with the stimulus packages, I think that's obviously a tailwind for gold and Bitcoin and crypto as a whole. Combine that with the technical chart, very, very interesting. One thing that we haven't looked at in a while is the gold silver ratio, which really peaked out here in March, where silver was basically extremely undervalued compared to gold historically. You were able to get 125 ounces of silver per 1 ounce of gold. Now that's come back kind of mid-range into the 72 ounces as of today, which is historically kind of the equilibrium there. So what that means is silver recently had a pretty big pop from the lows around $12 in March and recently topped out around $30. I know Rocky, aka Crypto Hustle in the community, had a really nice dip buy on this one and made some good money on that silver trade. But overall, just really interesting to see the capital flow into metals and crypto at the same time. There hasn't always been a direct correlation there, but it just seems like, with all the kind of inflation, deflation risk, whatever, Fed actions, a lot of people are looking at gold and crypto as a hedge. So I think that's a really big point. And also talking about, how we're starting to see kind of this new theme of publicly traded companies choosing to hold some of their cash reserves in Bitcoin. That's something that what was the company you guys remember off the top of your head?
I don't remember the name of it.
Yeah, it was, now I'm just totally blanking. MicroStrategy, MSTR.
MSTR, there we go. So yeah, MicroStrategy a few weeks ago basically announced they're going to hold about, $250 million of cash in Bitcoin.
That's right.
Trav, I'm really interested to hear your opinion on this, man, because, there's obviously risk with that, but that is signaling, some pretty interesting things.
Really bold move on the part of this is a large business intelligence software company. They've been around for like 20 or 25 years. In fact, they were one of the bigger BI software competitors in like the late 90s, early 2000s, but they kind of let other competitors take over, like Tableau and Looker, and some of the newer entrants in the market have really taken a lot of market share away from MicroStrategy over the last decade. But interesting, they have this new CEO who is really forward thinking and trying to do a lot of innovative things with the business. And that includes putting about half of their excess cash into Bitcoin rather than holding it in like safe instruments like US Treasuries or money market funds. It's interesting. I'm not sure if you're a shareholder of this company that prior to this, that, you really wanted this to happen, because there is so much volatility in Bitcoin. Obviously, we're believers of Bitcoin longer term. So I think, when we think about a longer term time frame, this probably works out and could work out very, very well for the company. But if you're more of a conservative shareholder and you don't want the company making decisions with the cash balance, this is kind of a weird thing for a CEO of a public company to do.
Yeah,
so
I agree.
It's a very interesting announcement. Imagine like a large company like Apple or someone saying that they're going to put a bunch of their excess capital that they have on their balance sheet into, it could be any asset. Maybe it's gold. Maybe it's something very, very different. What if it was some other company's stock, or what if it was, a VC fund? It's just really unusual to see a company park its excess cash balance into some asset that's not like a short-term safe instrument. So there's risk with this. Risk and reward.
So my question is, well, what would happen if we did see larger companies start to kind of follow suit? Maybe not starting with Apple, but some mid cap companies that were like, look, we do see risk with the dollar, And we're going to hedge that by holding, I don't know, anywhere from a few points to half or more of our cash in Bitcoin. And then that kind of becomes a self-fulfilling prophecy in a way where, if you're not doing that, then you're deemed irresponsible. Do you guys see that as a possibility?
I think it's possible. That would be a very, very interesting and bullish development for cryptocurrency and Bitcoin, especially. I mean, that would be a really, like I said, earth-shattering development in the history of cryptocurrency. So I don't know how likely that is, because again, most companies tend to be pretty risk averse. That's why you see most companies, they could even put some of their excess cash into higher yielding corporate bonds or even other stocks, but they haven't done so historically for the most part. 99% of all companies out there don't do that because shareholders, they don't want the company making other decisions outside the core business that increase risk. There's enough risk in the business itself usually. And shareholders can usually get allocations to whatever other asset class, whether it's Bitcoin or gold or other stocks, if they want to. So it's one of those things where companies tend to be more risk averse on average. And so I would be surprised to see this happen in mass. But like you said, maybe there's a scenario out there where confidence in the dollar really does start to wane on a broad level, in which case you potentially could see companies diversify at least some of their assets into things like Bitcoin or gold or other non-traditional stores of value.
Yeah. Or maybe when crypto or Bitcoin in particular shows not to be as volatile and it kind of levels out a little bit and kind of finds its price range. But I mean, that could maybe happen. But for right now, it's quite still volatile.
And you don't get paid interest. You don't get any interest on big. Well, I guess there are ways to do that through.
Yeah, I mean, there's higher risk options through lending platforms and things like that. But I think the reason why a company would do that is just, the risk of the dollar and maybe seeing bigger potential upside. But like you guys said, I mean, there's more risk. I choose to go with the extreme bull case of Bitcoin.
Of course you do.
Yeah, I think so. The first 10 years of Bitcoin's price history has been driven primarily by speculators and early adopters. My prediction is that the next 10 years is going to be driven more by larger companies coming into the space, institutional investors, and even sovereign governments that are going to start holding more wealth in Bitcoin, which I'm sure there are governments that are already, accumulating. People have sent me documentation of some smaller countries that are already doing this. Again, that's the bull case. We know what the bear case for Bitcoin looks like, but I'm choosing to stick with the bull case.
All we need is for Buffett to buy some Bitcoin and it's over. Everyone's going to be buying Bitcoin.
Well, we already got Paul Tudor Jones, so it's, the dominoes are falling slowly.
Yeah, but we need Buffett to come to the dark side.
Yeah.
Yeah. And when you look at Bitcoin at around a $220 billion market cap today, that is not pricing in much of a probability of it becoming a broad store of value, really, in my mind. I mean, there is some there, obviously, but I think when you think about the many trillions of dollars out there on company balance sheets or just total assets held by private investors, 220 billion is a small drop in the bucket. So I don't think it's really pricing in a high probability of something like this occurring. And so if it does start to occur, then watch out, because it could be explosive on the upside.
Look, guys, Tesla is sitting at a $375 billion market cap.
It's ridiculous.
Bitcoin is at 217.
Yeah.
My opinion is Bitcoin is dramatically undervalued and Tesla is dramatically overvalued. So we just need to get some of these Robinhood Tesla buyers to just come on over to Bitcoin. Oh, man. Hey, why don't we do this? Let's move over to housing, which has been on fire. Nikki, you sent this in. July 2020 monthly housing market trends. Buyer demand drives prices up 8.5% in July. I know we've got some anecdotal evidence of this that I think is pretty interesting, but what is there to talk about with real estate?
Yeah, I mean, the builders came out with their earnings and they did great and had great numbers. People are they're buying houses. I don't know, man. We thought that this was going to go the opposite way when all of this pandemic stuff started. But turns out that people want to move to the suburbs, or they want a bigger home, or they want to build something, or they're going out to the mountains, or whatever it is. And there's just not enough supply. And I don't know if this is something to do with people just not wanting to move right now, so they're not putting their homes up for sale. But then the flip side of that is like, well, maybe this is a good time to put your home up for sale if prices are up so much. So yeah, I mean,
it is
sucks.
A buyer's market, or it is a seller's market.
It's a seller's market for sure. And it sucks because, you know, millennials have struggled enough with housing prices going through the roof. And here we are through a pandemic, and they're still continuing through a recession, and they're still continuing to go through the roof. So
yeah. So you've got, I guess, a culmination of a few things. One, less supply because less people are putting their homes on the market, combined with, I guess, we're seeing this in lumber, supply chain disruptions, which, Trav, I know you sent me an article on this, but just jumping over to lumber, you know, we can see that lumber is actually broken out to all-time highs, where over the past several decades, it's been in between like $200 to $500. Just in the past few weeks alone, after the low in March, it went from 250 up over, as of today, over $800. I personally think there's a good short here somewhere in the future. I don't know exactly when. But, you know, when you got all this demand for new housing, and you've got supply chain disruptions in lumber because of COVID, you know, it's just causing these explosive prices. And personally, I was actually talking to a builder last week, and he said that they're actually building in clauses into their contract that has variable pricing on lumber. So they're saying like, look, the price of lumber is going so crazy right now. Like, we're not going to commit to a lumber price. You're going to pay for whatever the lumber price is when we get it, which I don't think is something that is historically been done by builders. Trav, what's your perspective on this?
Yeah, this is another factor that's going to, I think, continue to push up existing home sale or home prices. And it's going to make building new homes much more expensive. And therefore, I think it's going to keep a lid on new supply to some extent. So this is another thing that's going to, I think, keep the housing market prices up. And it's interesting because what's happening here, like you said, is a supply chain issue, because there's no shortage of timber, like raw trees and raw timber. That's not really the issue. The issue is that the labor and the facilities to actually cut raw timber and create the lumber products that go into housing and other end markets has been short of labor and short of hours to actually do the work. And so because of the shutdowns, the coronavirus issues, there has been a much, much lower ability to actually mill timber into lumber. And so that's caused this shortage of lumber. And I don't think that this market is going to find a supply of that labor and that cutting capacity for at least a few months. So again, I think this probably continues well into the fall and maybe even through the end of the year, based on what I've read about this market. I'm no expert on the lumber market, but again, yeah, it's a really strange result of just another supply chain issue. And so we've seen this in lots of other places like RVs or even used cars and all these weird markets where there's just not enough inventory, and it's going to take probably 6 or 12 months to actually get to a place where the producers can catch up with demand.
Yeah, that, you know, moving on to RVs, you know, that's another space that has also seen kind of a similar thing where the demand has increased, but because of COVID, the supply has decreased. I actually went to talk to some RV dealers last weekend to kind of get a better sense of what's actually happening on the ground. And both dealers I talked to said that they're down 80% off of their typical inventory. So basically their lots are like almost empty. And one sales guy said he's basically selling paper, which means he's just writing contracts for new RVs that are yet to be built. And because of COVID and because of the lumber shortage and because of all these other supply chain disruptions, they don't know when they're even going to be able to ship these RVs to people. But people are so hungry for them, especially Americans, right? We are the pariahs of the world right now. We can't travel anywhere.
Yeah, no
so
one will let
more
us
Amerians
in.
are like, well, I guess that we could hop in an RV and go sit in the woods somewhere.
Yeah. There's a lot to explore here, I guess.
Yeah. But yeah, I mean, so, we've got housing, we've got RVs. What other, I guess, niches are having kind of a similar increased demand and decreased supply because of this weird COVID scenario? Can you guys think of anything else that's being impacted like this? Or is it mostly like housing and vehicles and RVs?
I mean, we've talked about the fitness industry before.
Yeah, very
that's
true.
been
I
an
guess a lot of
interesting
those
one.
supplies are still sold out.
Yeah.
I've noticed in some of the apparel retailers that inventory is pretty thin. I know walking into Nordstrom, for instance, a couple weeks ago, I needed to pick something up there, and I noticed that the inventory levels were very, very low relative to normal. So I think there probably are some pockets there as well. I mean, apparel retailers took such a hard hit over the last 6 months that they're probably a little hesitant to order more inventory. We've also seen a shortage of inventory with some types of like work from home electronics too. I think that probably is a little bit easier to fix since a lot of that comes from China and China's back up in producing. But
yeah,
That's really true. Between a retail order that I put in and an order for some home furnishings, both orders got canceled completely. Like they just were like, sorry, we can't fulfill this. And I'm like, okay. It's strange.
yeah, I noticed a lot of Wayfair's products, that's been a stock that's been a monster from the bottom, but Wayfair's products, a lot of them are out of stock much more than normal.
Mm-hmm.
So that's, I think, similar to what you were saying, Nikki, that's a potential area as well where there's just not enough supply. There's a gap. There was that, couple months of gap where nothing was getting produced. And then when you have demand come in like a tsunami, you need some catch up time. I think there's one interesting area with, I think, air travel is one where we don't see a shortage right now, but I think there could be a shortage of seats in like a year or two because the airlines have been cutting back capacity. And I know there's this whole issue with business travel demand, and a lot of people believe that that's not ever going to come back, or it's not going to come back in the same way. And so airline capacity needs to be permanently lower, but so much capacity is being taken out and so many planes are being permanently parked that I think we could see airline load factors in a year or two once things are normal in society again. I think we could see like airline prices go up a lot for tickets, and at certain destinations, I think it could be really hard to find seats on some of those routes.
That's a really good point. Have you looked at airline prices lately to see if I haven't looked to see if they've been increasing or decreasing or kind of the same? I don't know if you've been paying attention.
Yeah, this is very anecdotal. I'd have to look at broader trends, but anecdotally, one route that I was looking at for a flight, cross-country flight, was $150 during, I think, April or May when things were still relatively shut down, and then 2 months later, it was a $400 flight again, which is like its normal level. So I think a lot of the discounting that took place back in the spring or late spring, a lot of that probably has gone away.
Mm-hmm.
But I'm sure there's some certain routes like leisure routes or maybe corporate business routes that still are way down in price. But I think a lot of the amazing bargains may be past.
Makes sense.
Interesting. Okay. Next thing on the list, talking about security tokens. This is a space I've been really excited about the past couple of years, but has kind of been a real slow mover. So security tokens are kind of like the next evolution of, ICOs, right? So initial coin offerings were, we had a big wave in 2017. There were a lot of scams, a lot of just, vaporware projects. Nowadays, we're starting to see real assets getting tokenized. So as of today, the St. Regis Aspen security token started trading live on tZero. So basically what happened is the ski resort in Aspen, St. Regis, they tokenized some of their equity, and now these tokens are freely trading on the tZero platform, which is pretty interesting. This is, I think, kind of the future of, or at least one of the future market sectors of security tokens is tokenized real estate. And why this is interesting is because it's just easier and cheaper for projects to raise capital and launch tokens. And then it's better for the investor because you get quicker access to liquidity And, you might even get a little bit of a liquidity premium because it hasn't been easy to move in and out of private investments in real estate, especially if you're just a small, investor of a fraction of the overall raise. So this is definitely a step in the right direction. This is something I'm excited about. And, actually, tZero's token, its native token, has really gone up in recent times. I mean, it was down, I think, around $1 just a few months ago. As of today, it's trading around $6. I was buying this a couple years ago in the $2 and $3 range. So, pretty nice to see that. I think their initial raise was maybe at $10, $5 to $10, somewhere around there. I can't exactly remember, but it's definitely starting to gain momentum. I hope to see more capital raises over the next few months and years.
Yeah, I would love to see hundreds or even thousands of assets tokenized and really get this market up and running. And I think it will be a fascinating one if it develops well.
Yeah. Nikki,
now I want to go skiing. Thanks a lot.
We'll be able to get out there this year. Nick, I wanted to pull this up. I know you were sharing this on Twitter, talking about financial literacy exposing grave impacts of the lack of financial education. What do you have to say about this?
Yeah, it was a Charles Schwab survey that came out, and it just brought to light that a lot of Americans, and this is something I don't feel is talked about quite enough, how financial literacy, financial education, obviously we know it's not taught in schools, and if it is, it's not usually taught well, or you don't get enough of it. And a lot of people believe that with all the social issues that we're seeing right now, wealth inequality, racial inequality, etc., financial literacy, I believe, is a huge part of helping to solve that puzzle. A lot of people they aren't either taught these things from their parents. They don't have access to mentors to help them learn these things. And so a lot of Americans agree that financial literacy needs to become more of a priority in our education system.
Yeah, I completely agree.
I think that nothing bad can happen from it. It's challenging because a lot of the financial industry kind of depends on us being dumb when it comes to money. Like, who's going to manage assets if everybody kind of knows how to manage their own assets, right? Credit card companies are going to struggle if people aren't drowning in debt, paying high interest rates. And so sometimes I feel that the financial industry does better by keeping everybody uneducated, so to speak. But hopefully that changes. I think it's super important.
I know that's one of our missions of the show is to just help people become better investors and, better stewards over their own capital.
Yep, exactly.
Yeah. Let's go into jump into some questions. Ralph was asking, I'd love to learn more about how to buy and invest in physical metals. Where do you buy them? What's better between coins, bars, etc.? What would be a fair price to pay for them compared to the charts? This is something I think we've talked a little about this in past shows, but I think that is something that a lot of people just don't know how to do, is like, actually, well, how do you buy gold? How do you buy silver? So I'll take a stab at this one since I've done quite a bit of this. Usually if you're in a city, there should be local places that actually sell gold. And as far as a price, what's a fair price to pay? It's usually spot price plus 3 to 5%. Okay. So if you're buying just base metals, you really shouldn't pay any more than that. So if you just go and you look at like the futures price of gold, you can see as of right now, it's $1,938. So you would basically add anywhere from 3 to 5% to that. And that depends on what quantity you're buying. So anywhere from a 1 ounce coin to a 1 ounce bar or larger. Usually the larger the quantity, the better the percentage is. But if somebody's trying to sell you on like the rareness of the coin, that really doesn't matter if you're trying to buy metals as an investment. And that's a way that people really get fleeced, is they look at like a TV commercial that's like, hey, buy this rare coin for only $49. And they're really only putting like $10 worth of gold in that coin. There's also other websites like Provident Metals, Amagi Metals. There's several websites out there that that you can buy physical gold either with cash, a check, Bitcoin. They even accept credit cards, but you're going to pay a percentage on top of spot plus whatever their fee is. So just make sure you're not getting fleeced. Make sure you're paying as close to spot as possible. And when you go to sell, there are many places that will actually buy for spot. So you shouldn't actually lose money whenever you sell. You'll just have to pay a little bit when you're actually a buyer. All right, next, I think we answered Andrew's question about runaway stocks. Next question is Sarah was asking, should I take out $50,000 out of my 401k and invest it in cryptocurrency?
Oh,
this is a question I get pretty much every day of my life. I want to hear you guys answer, and then I'll give my response. Nikki, go ahead.
look, here's the deal. When you're talking about your 401k, you've deferred your salary into this account. It's investing in the markets. If you pull it out, you're going to get penalized before retirement age. If you take a loan out on it, you're going to obviously have to pay interest, even though you're paying interest to yourself still. Look, cryptocurrency is point blank a riskier investment. So if that is something you have to consider. Your 401k, the idea is you want to keep those funds in, you want to keep them invested, keep them tax deferred, rolling all the way up until your retirement. If you can find capital elsewhere that's not your 401k, that's usually the better choice. You don't want to just pull money out of your 401k to put it in something riskier. But you guys may have a different opinion on that, but coming from the holistic financial planning aspect, it doesn't feel like the wisest decision. It has a lot of risks.
Yeah, I think you want to try to get your cryptocurrency exposure through another vehicle. Like, you don't want to take penalties and take money out of your retirement account, which has all kinds of tax implications just to get exposure to cryptocurrency. You probably want to use discretionary dollars that you can save from your income, or taxable dollars that you get from some other account that's not an official retirement account to actually get exposure to cryptocurrency. Now, I guess if all of your assets, all of your liquid assets are tied up in your 401k, then that does pose a little bit of a conundrum for you, because you don't have excess capital to invest in cryptocurrency outside your 401k. So in that case, that's tough. Maybe there's some way for you to save money over the next year or two that you could slowly invest into cryptocurrency and dollar cost average in. But that's something you're going to have to kind of figure out on your own.
Yeah, I mean, I agree with the point of, like, don't take penalties to buy crypto. You can certainly buy Bitcoin in a tax advantaged account. Like, you can get a self-directed IRA and have a custodian actually hold that Bitcoin for you in a qualified account. But I tend to agree about the risk aspect. And what we mean by risk is volatility, right? Like,
yeah.
Volatility equals risk. And, there's so many different ways to measure risk and look at risk adjusted returns. But just understand, like, if you're going to sell something in a tax deferred or tax qualified account to buy Bitcoin, not only are you taking fees, but you're probably going to be dealing with much larger drawdowns. And if you're somebody who is emotional about the markets or makes emotion-based decisions, it's just super, super risky. So, again, this isn't personalized financial advice. I don't know your situation, but just in general, think of your crypto investments as risk capital, like capital that you're not going to freak out if it goes up 1,000% or down by 95%, right? And if you want to add to it and actually invest in crypto in a tax advantaged way, then maybe set up a new account and start saving and allocating some of your current cash flow to crypto to allocate a percentage of that into that market. But again, I think it's just maybe not the right play to liquidate an existing investment, especially if you're going to take tax penalties.
Great point earlier too about the potential to do a self-directed account where you can actually invest in cryptocurrency through a 401k type of vehicle. So there's a few different ways to do that, but that's a great option as well.
Yep. And also, I mean, just keep in mind the fact of if you don't hold your private keys, they're not your coins. So, you know, I think one of the most risky things to do is to buy Bitcoin and leave all of it on an exchange, because exchanges could get hacked. Your personal account could get hacked. So look at hardware wallets, you know, look at the different ways, look at multi-sig wallets, look at the different ways to protect that crypto that you're buying, right? Don't go in and just expect this to be like some FDIC insured account.
And another point on this with the 401k side is if somebody decides, oh, well, I'll just do a loan and invest that into cryptocurrency, what happens is if you lose your job, most of the time, depending on the plan, you'll have to repay that loan upon separation from service with the company. And if you're in a drawdown in crypto at the time or whatever the case may be, you may end up kind of losing money in that sense and not be able to pay back the 50K to the 401k plan. So there's a lot to think about with something like this.
Yeah. I think that's a great point. You know, don't go into debt to buy crypto. Don't take a loan out against your retirement to buy crypto. Look at it as what it is. It's the best performing or fastest growing asset of the past decade, but that didn't come easily, right? That came with multiple 80% or more drawdowns in price.
Exactly.
So keep that in mind.
Yes.
And if you can't stomach that type of volatility, then either play with a little bit of money or don't play at all, because the worst thing to do is to be on the wrong side of the market and buy high when everybody's talking about Bitcoin and then sell when price crashes. You're basically going to be doing the opposite of what we do. You know, the people that are actively trading it, that are engaged every day, that understand it intimately, and that know how to look at price action and understand when the best times to buy and sell are. So awesome, guys. Well, we covered a lot of ground today. Talked about crypto, talked about, you know, where the stock market is, talked about metals, talked about, you know, housing and lumber and RV sales and, you know, financial education. For any of you guys that are looking to invest more wisely, we encourage you to check out the Skill Incubator Wealth Building Community. We'll link that up in the show notes in the description. You can come in, see what we're doing.
Join us.
Yeah, come party. We've been having a blast. A lot of people have been doing really well with some of these altcoin trades over the past couple of months. And, you know, if you have questions or comments, always feel free to reach out. Send in questions. Go to wetalkmoney.com. You could submit a question for the show. And stay safe, stay healthy. And yeah, thanks for joining me, guys.
Thank you. This was fun. It's great to be back.
Back in the swing of things. So yeah, we will see you guys next time. Take care.